What always happens with Tesla is the bulls get a little overzealous, the shorts get a little fearful. I'd be a seller of Tesla because I think going forward, you're going to be disappointed with these numbers. And I don't think it's any place to hide in a market as volatile.
I mean, if you're an investor in Tesla and you're buying the stock here and you're not covering a short, you are whistling past the graveyard, in my opinion.
As you saw with that intro, if you are an investor in Tesla or thinking about investing in Tesla, there are a lot of people rooting for the company to fail. There's well-known media skeptics and short sellers who want to see Tesla's share price tank. By trading Tesla stock, you have to pay attention to mood swings and momentum. But if you're a long-term investor, none of the short-term ups and downs matter. All that matters is the company story and if you believe it. If you've been following Tesla from the beginning, you would know their company story hasn't changed. Tesla's mission is to accelerate the world's transition to sustainable energy. Tesla's products are changing the world by consuming, generating, and storing sustainable energy. However, many Wall Street analysts consider Tesla only as an electric car company. In this video, I'm going to show you my 3 bullish valuations for Tesla, all with a different story. In my first story, Tesla passes Toyota and becomes the biggest car company in the world. The second story is Tesla's energy business grows as fast as its car business. And the final story, everything comes together, cars, energy, and they successfully launch autonomous robotaxis. While my 3 valuations may seem far-fetched, I think it's important to consider that Elon Musk and Tesla have a history of proving doubters wrong. Let's go to the beginning of Tesla. Nobody thought a startup company could build an electric car, and even if they did, nobody thought they could sell it for over $100,000. They did with the Tesla Roadster. Before they built the Model S, people said Tesla couldn't manufacture their own car. While the Roadster was built with a highly modified chassis from Lotus, the Model S was built from scratch by Tesla. In 2018, people thought the Model 3 would bankrupt the company. Now the Model 3 is their best-selling car, and the stock price has skyrocketed. I think the biggest takeaway is that when Elon Musk says he's going to do something, you should listen, because Tesla has a history of accomplishing things that have never been done before, things that seemed impossible. In my first valuation, Tesla overtakes Toyota to become the biggest automaker in the world. I assume Tesla makes $0 from any other product other than their auto business. Take a look at revenues from auto companies in 2019, and you'll see becoming the #1 revenue car company won't be easy. Toyota made over $285 billion in revenue, selling almost 11 million cars in 2019. Compare that to Tesla, who sold 367,000 cars in 2019. It may seem unlikely, but there is a path for Tesla to produce over 10 million cars. From 2012 to 2018, Tesla increased production by a factor of 10, from 23,000 cars to 250,000 cars. At Autonomy Day, Musk predicted Tesla could increase output by a factor of 10 until 2024. At this rate, Tesla would produce 2.5 million cars in 2024. Let's say the annual production rate slows down by half, a factor of 5, until 2029. Tesla would produce over 12 million cars. At an average selling price of $35,000, Tesla would earn $350 billion in revenue in 2029. To make this happen, Tesla would need to be able to make enough batteries to build over 12 million cars per year. Right now, this is the biggest barrier. Tesla's biggest problem isn't selling cars, it's the ability to build enough batteries to supply them. I assume Tesla solves this battery problem and they continue to sell as many cars as they can make. I set the future operating margin at 10%, which is significantly higher than other auto companies, but I believe Tesla can achieve a 10% operating margin because of software upgrades like Autopilot, and Tesla has proven they can lower the cost per car in China. They've learned a lot from building the Model 3. In my valuation, I expect Tesla to reinvest in more factories and build them efficiently. After inputting all the numbers on my 10-year discounted cash flow spreadsheet, the fair value comes out to $835 per share. And remember, this is my value for Tesla today, just as a car company. In my second valuation, I value Tesla as a car plus energy company. Tesla Energy has been on the back burner during Model 3 production, but Tesla's energy products will soon be a much bigger story. Tesla Energy consists of generation plus storage. Solar panels and the new solar glass roof generate energy, and their Powerwall, PowerPack, and Megapack batteries store energy. At the Q3 2019 earnings call, Musk said, "It would be difficult for me to overstate the degree to which I think Tesla Energy is going to be a major part of Tesla's activity in the future. In the long term, I expect Tesla Energy to be of the same or roughly the same size as Tesla's automotive sector or business." To estimate revenue for energy, first I looked at the addressable market for solar. There are about 5 million new roof installations per year in the United States. If you're building a new roof or replacing one, the value proposition is simple. As Musk puts it, do you want a roof that is alive with power or dead without? Plus, Tesla's solar roof is cheaper than a new roof, plus adding solar panels. On their website, Tesla sells a 2,000 square foot solar roof for $42,500. Let's say Tesla gets 20% market share with an average selling price of $40,000. They'll make $40 billion per year on solar roofs alone. The solar panel market is growing fast. It's estimated that there will be over 3 million installations in 2021. If the compounded annual growth rate of solar panel installations continues at 15%, there will be 12 million installations in the United States in 2030. Tesla's new subscription offering for solar panels is a game changer in this industry. Musk says, if you buy our solar subscription, there's no money down, and you instantly save on your utility bill, and there's no long-term contract. So it's kind of a no-brainer. It's really, do you want something that prints money? And if it doesn't print money, we'll fix it or take it back. That's a pretty strong value proposition. I estimate Tesla grabs 20% market share of solar panels as well. With an average selling price of $20,000, Tesla makes $48 billion per year selling solar panels. Now we're up to around $90 billion in revenue per year for Tesla Solar. Out of the estimated million people who install a solar roof each year and the 2.4 million people who install Tesla solar panels, let's say 25% of them purchase a set of 2 Powerwalls to store energy in their home. That's about $12 billion per year. This is how Tesla can make $100 billion per year in energy revenue. I should note, I'm not even including any potential revenue from the PowerPack and Megapack. Adding $100 billion to the valuation, Tesla's value is $1,085 per share as a car plus energy company. In my final valuation, Tesla successfully launches autonomous robotaxis. When it comes to valuing Tesla, Robotaxi is the most controversial aspect of the valuation. Most people have an "I'll believe it when I can see it" attitude about the Robotaxi, and for good reason. Delivering an autonomous network of cars that can drive humans to where they want to go and not crash would be one of the most incredible technological achievements of all time. Some of the most bullish Wall Street Tesla analysts don't believe Tesla ever launches the Robotaxi, and don't include the Robotaxi revenues in their valuations. The exception is ARK Invest, whose price targets in 2024 range from $15,000 to $22,000 if Tesla can successfully launch autonomous robotaxis. As I said before, when Elon Musk says he can do something, you should take him seriously because it'll probably happen. Full self-driving in the robotaxi network is something he said Tesla will accomplish for a long time. Here's why Tesla can do it. Before you can launch a robotaxi ride-sharing service, you have to solve autonomous driving first. Companies like Waymo and Uber are trying to do the same thing, but Tesla has huge proprietary advantages. The first advantage they have is hardware. They are the only auto company who has their own self-driving chip and computer. To do this, Tesla poached a top chip engineer from Apple who developed the hardware. It's far more advanced than the third-party NVIDIA chip that other self-driving companies rely on. The NVIDIA chip that Waymo and Uber use isn't specifically made for a self-driving car. The second advantage is artificial intelligence. Advanced AI with vision and neural networks help Tesla detect and label objects so a car can be driven without any human intervention. The third advantage is Tesla's autopilot software. No other car company has their own in-house self-driving hardware working seamlessly with their in-house software. The fourth advantage is Tesla has way more real driving data. More training data leads to better performance. Tesla has over 14 billion miles of real-world driving data, while Waymo is second with 20 million miles. Tesla is undeniably winning the race to build the first autonomous car. And when regulators approve Tesla's autonomous fleet, their revenue potential and operating margin can increase substantially. The cost of an average Uber and Lyft trip is $2 per mile. I estimate Tesla's cost per mile at $1, and Tesla takes a 35% cut of each ride. If each Robotaxi drives 100,000 miles per year, Tesla can make $35,000 per year on every car in its fleet. With 5 million cars in Tesla's fleet, Tesla would make $175 billion per year from Robotaxis. While the revenue potential is huge, the most appealing thing is that Robotaxis can operate at a much higher margin than their auto and energy business. It'll likely be software-like margins of 20% plus, and they will generate recurring revenue. By adding $175 billion in Robotaxi revenue and increasing Tesla's operating margin from 10 to 12% in my valuation, Tesla's value is $2,038 per share. To recap, as a car company, I estimate Tesla is worth $835 per share. As a car plus energy company, Tesla's value is $1,085, and with cars, energy, and robotaxis, Tesla's value is $2,038. All of these valuations tell a very optimistic story, but they are all stories I can believe in. The bigger your story for Tesla, the bigger the valuation. In the comments below, let me know what story you believe in, if any. Bulls and bears are welcome. Subscribe if you'd like to watch any of my upcoming videos. It would mean a lot. Thanks for watching, and remember,